Any thoughts on the outlook for venture overall as a category, looking out the next 10 years? Absent from QED, I expect QED will do just fine in this environment, but more broadly, my own perspective is that there's a lot of money in the category, and excess supply of capital relative to a finite number of quality opportunities means valuation goes up and therefore subsequent returns goes down. Obviously, different subsectors in venture will perform better than others. But how do you see venture overall? And then maybe subcategories that you're excited about?
Yeah, I wrote a paper that you mentioned about a year and a half ago called the three body problem. So if anyone's interested in a framework for thinking about venture firms, I think it's an interesting paper and at least gives you a way of categorizing VCs and what it will take for them to succeed. But the reality is like venture firms have two customers, and it's important to understand that they sit in the middle of this ecosystem, right? You have the LPs that are giving them the money to invest, and you have the founders, right, that are building the companies to invest in. And ultimately, a healthy VC firm has a product that works for both of those ecosystems
Yeah.
simultaneously. And that's a problem because if you actually were to be like give every VC a truth drug and had them evaluate like the structure of their VC, 80% of them would be in a technically bankrupt box because they're only serving one of the two parties. And some of them might be serving none of them. So you have to ask and answer the question, if an LP had perfect information about performance, perfect information about skills, would they pick my VC first? And you allocate money to the VC, I should say, to invest the money on their behalf. And at the same time, you have to have an answer in the startup ecosystem and say, if a right hand tail founder with a right hand tail idea had perfect information, would they pick your VC firm first if they had perfect choice? And if you're not a founder's first choice, then you're in the exhaust of the tier one firms. And if this is a power law game, like you can make money, like mining someone else's exhaust, but that's hard work, like
Absolutely.
really hard work. And I hate
Yeah.
to call it, and I don't mean disrespect, but looking for the cream of the crop is hard. That is harder to do.
Adverse selection.
It's easier to figure out how to become a tier one firm than to make it work as a tier two firm, mining the exhaust of the tier one firms. And on the other side, it's the same with LPs. Like you're actually seeing a rationalization happen right now where they're starting to look at the strategies of the VCs and say, wait a minute, why would I give this firm more money when I have this firm over here that's doing really well? They're strategically positioned well. They can articulate what their strategy is and why it's going to generate, outsized returns and alpha. So you have to be able to ask and answer the question, like why you exist in the ecosystem. A lot of the answers are really shallow.
Yeah, no, I agree. I think there's a lot there. The top quartile median IRR on venture is in the 15 to 18%. That's coming off a decade of strong performance. And that means that the vast majority of investors in venture are not getting the required return they should expect from an illiquid, high risk investment. That 15 to 18% return should be the return for the 25th percentile, not the 75th percentile. The vast majority of capital investors cannot deliver that kind of return, including angel investors and funds that don't have the seasoning or the edge in sourcing or thesis driven approach. And the other part is it's a question of serial correlation. Do great funds in one vintage outperform the next? So John Doerr was the hero VC when I was finishing school. I'd read the John Doerr books and interviews. And Kleiner Perkins is where he worked. And of course, he retired. And Kleiner Perkins was number one VC. And they're a great firm, fantastic people, but it's just not the first call as it used to be. Sequoia has maintained that brand. They took a few dings with FTX. I think they'll get past that. I don't think that's really an issue. Your firm was created after those firms and you're maintaining that. But how do you think about that autocorrelation in venture?
So thing number one, I can truly say I don't understand how to be a generalist and create a value proposition that absolutely has repeatability of performance. right? Again, the surface area you're covering is everything. And if you look at the Cambrian explosion of startups that are out there, like how do you underwrite everything? I just think about the work that it takes to understand an ecosystem and to understand a founder and to understand like the context. And again, it's the only way I know how to do the job. So it's hard for me to imagine
Yes.
being a generalist and tomorrow being asked, go look at a enterprise software company that sells into telcos. I wouldn't even know where to start, right? It would take me a year to just feel
Yes.
comfortable with the language that people are using. Because by the way, founders are incredibly charismatic and they will convince you of things if you actually don't have the ability to understand the ecosystem as well as they do.
Specialization matters. And you also future cast too. So not only you are focused on a category, but you have a thesis, you have a vision. Of course, that's being informed by founders you talk to as well that might or might not align. But I think that's another distinction that
Yeah.
you're
But by the way, there are individual investors who are incredibly good at being generalists and succeeding over and over. The question is, can you assemble a firm that can outlast the individuals? Can it be a generational firm? Benchmark is an incredible example. I adore the people at Benchmark, but the entire model is contingent on how good are they at replacing
right.
a genius with another
How
genius. Like it
right.
is literally one in, one out. It is about talent. It is about making sure that you have the most insightful people that literally can spot the winners incredibly early in a generalist context. I don't know how they do it. I couldn't do that job.
One of the founding partners was a former recruiter, which may play a role in the talent. But no, your point is well taken.